Good morning, and it's the 28th of March. We are Signal Centre Talking Ball. I'm Joe Neighbour, joined by Steve O'Hare and a new face this morning, Jamie Pakenham-Walsh. How you doing, gents?
Thank you. Very good, thank you.
Very well,
Welcome
Good.
to
thanks, Joe.
Jamie.
Very good.
Yes,
Thank you very
welcome,
much.
Jamie.
Appreciate it. Thank you.
Jamie's been working with us for a good few months now, in a role as an analyst and doing various other bits for us as well, and been doing a fantastic job. So we wanted to get him on board because he's got a fresh perspective on things when it comes to markets, and he's going to be covering some stocks for us today, which is all very exciting. So welcome, Jamie.
Thanks very much. Yeah, excited to get stuck in.
Cool. Okay, so going to start off with the latest headlines as usual, and what we have here is the latest market headlines. We've got US 10-year yields at a 34-month high. Underlying US inflation concerns have continued to increase, especially with global supply chain issues, and there are expectations the Fed will have to sanction a further series of interest rate increases. US yields have continued to increase to a 10-year high above 2.5%, which is the highest level since May 2019. On the Japanese yen side of things, that continues to weaken, again at fresh 6-year lows. In Asian trading on Monday, the Bank of Japan announced that it would buy unlimited bonds in the market to cap domestic yields. That's following a move following that move, there was further aggressive yen selling. And we'll come on to that shortly when we look at some FX charts. The German business confidence number has slid lower. The German IFO business confidence index declined sharply to 90.8 from a previous reading of 98.6. Which is well below the forecast of 94.2. So that's not a great look for Europe's largest economy. In terms of what's going on with Russia and Ukraine, peace maneuvers in focus. There have been no major military developments in Ukraine over the weekend. Russia has suggested that it will focus the military battles on the east of Ukraine, and also suggested that some form of partition could be a longer term solution. Ukraine has rejected this notion strongly, but indicated that some form of guaranteed neutrality could be a solution. We finally had the Swiss National Bank downplay the importance of the euro-Swiss franc parity. In comments over the weekend, the SNB chair Jordan said that the franc gains could, through to the parity level against euro would not be of greater importance in economic terms. His comments reinforce speculation that the SNB could tolerate medium-term franc gains and euro-Swiss losses. So let's get stuck into some charts now and have a look at things from a technical perspective. Steve, do you want to kick us off? We need you to share your screen if you can.
Yep, of course. Yeah, thanks for that, Joe. I'll take a look at indices first because they seem to have got off to a bit of a roaring start in many regions, especially the DAX. We'll have a look at DAX on the weekly chart first. We can see that we've had this reversal. Last week was a little bit of a damp squib. Is it squid or squib? I'm not sure.
I think it's squib.
Okay.
For a squid,
lovely.
let's stick with squid.
Yeah, exactly. That's not a bad Wordle word as well. Anyway, a bit of indecision last week, and this week it's got off to quite a decent start. So breaking it down onto shorter time frames, we can see that the Ichimoku cloud is supporting this move higher. We've got downward trending resistance coming in. This is like more of a short-term downtrending resistance coming in, and we should find that around about the 14,700 level. I mean, it is like 250 points away, but that's a sort of like normal market move at the moment for these indice markets. On the shorter term chart, you can see how it's broken up in these first few hours. Let's get rid of that poor trade idea. Yeah, so nice move up, stalled at 14,525 and reversed from there, but good potential for some upside at the start of this week. On the Dow side of things, again, we can see this hanging man type doji candle from last week, where we did retest the buyer's resolve. We had a sell-off during the week, and buyers came back in strongly, and the market closed around about where it opened, just slightly above where it opened on the Monday. and that's positive, although we need to be wary to see whether these sellers will try again to put a dampener on the current market moves. We can see on the daily chart we've got momentum slowing down as we've got this sideways price action. 78.6% Fibonacci retracement of the previous down move sits around about 35,100. That's about 300 points above where we're trading now. On the Nasdaq side of things, this continues to probe higher. Again, Friday's price action was a bit of a hanging man candle, so it didn't look great. Not so positive on the Nasdaq side of things, so the technology stocks haven't joined in the fun this morning. We've still got this potential for the head and shoulders formation, despite the sort of momentum we've seen pushing higher over the last 5 to 7 days. On the S&P side of things, we're at a decent level. We're close to where the left shoulder was on this head and shoulders formation that we picked up on, and that's coming in around about the 45,500 level. The right shoulder really will offer resistance around about 4,600. Did I say 45,500 level? 4,550 level, I meant. So yeah, again, sort of like, so started off quite positive to the upside, but there's still a long way to go for this week to pan out. Have a quick look at cryptos. Good move for the Bitcoin. We've managed to break through resistance at this 45,850 to 46,000 resistance level, although seems to have stalled a little bit and come back. But we can see on the 4-hour chart, it looks pretty positive. Broken through this, out of this triangle formation, retested and pushed on aggressively higher. We got up to 47,750. So it's a positive move for the Bitcoin. Obviously, it's been dragged up as well with the indices. It seems to work hand in hand with the indices at the moment. A little bit of money coming flooding back into these risky assets. And commodities. Am I doing commodities, or am I gonna?
Yeah, if you can,
yep.
Steve.
And yeah, oil on the weekly chart, a decent week last week. The week before, we got down to $92.5, $93, and the buyers came in and supported the market. Very positive week last week, pushed on towards the $116 level in WTI crude oil. We started off this week a little bit lower, so we can see if we break it down to the hourly chart, we can see we've had this gap open overnight, and we've eased back a little bit of maybe the defrosting of the Ukraine-Russian tensions, with hopes and fingers crossed for the possibility of a quick resolve there. Although I see Biden was making comments over the weekend, which was trying to inflame the situation. Well done, President Biden. I actually want to say bring back Trump, but I don't know how that will go down with all the level-headed people in the world. But anyway, well, this was a good trade idea in hindsight. It's the market.
You made a tiny loss on it at 9 o'clock on Friday.
Yeah, that's right. Made a tiny loss on it, and it seems to have sort of like had the move which I was hoping for, but after hours and after the weekend. So can't really claim that one, unfortunately. But yeah, it's getting down to gold, getting down to these levels for me now. We've got this 1966 level, which we said was a good year for the England football team, and yeah, it seems to have sort of like broken down through the support at 1938 and trading just below there now. Further support we'd expect between 1912 and 1920, and then below there we've got the this spike lower got down to 1895. That'll be one to watch as well moving forward this week. But yeah, the first level really to hurdle is around about the 1920 level on the downside, and the upside really needs to push back above the 1966 level to kick on.
Cool.
Yeah, that's about it from me.
Lovely. Cheers, Steve. I'll have a quick look at FX then, and we'll hand over to Jamie to look at some stocks. So dollar index, we can see here, this is breaking out of a consolidation pattern, up by almost 0.5% today, and looking now to be edging ever closer to that $100 level. So still looking very bullish on that front. And no signs of that slowing down. Looking at some of the Aussie currencies, they're all very much on the front foot today as well. So we're seeing dollar move higher in line with the risk assets as well in FX, which is quite interesting. I'm not going to go into too much detail because I don't want to spend too much time looking at all these different markets that we're looking at. So we will offer something a bit more granular maybe later in the day. But Euro US dollar on the flip side of the dollar index is breaking down following a mild consolidation. So that looks like we are set to move back to the lows that we posted in early March, possibly down to these levels here, which is at 106.37. If we take a look also at dollar yen, just this is being seen across the board really with yen currencies. The yen is obviously very weak at the minute. We're down at 6-year lows on the Japanese yen, and yeah, this is the one I wanted to look at really because it just highlights the strength in the dollar, but also the severe weakness in the Japanese yen. From this breakout here at 116.35, it's just absolutely flown up to these levels that we're at the moment, which is just shy of 124. So as you can see, a massive move, and that is being seen elsewhere on these yen currencies. There's Aussie, there's the euro, and there's the New Zealand dollar there. So yeah, no slowing that down on the downside at the moment. So that's it from the FX. Let's hand over to Jamie. Jamie, you need to share your screen if you're going to show us some charts.
See if I can do this. Cool, there we go.
Look at that, what a great start. He's done it.
Well done.
He's broken the ice.
Seamless transition, wasn't it?
Yeah.
The first stock I was going to take a look at today was AMC. And this stock for me highlights support and resistance levels and how they come into play really nicely. Looking at it from a weekly perspective, we can see that it's tested this kind of around $14 level a couple of times, but it's not managed to close below it, even though it has broken through. And that's more evident when you go down to a daily level. You can see that this used to be a resistant level back in March of 2021 and in May again. And it's found that as support now in January and again now in March. The volume's picking up on this as well, which I think is quite significant. And it's gone right into this again, a previous support level back in December and in January. It's hit it once in February and it's hit it again last week. So a close above this, I think, would be significant, but that's yet to be seen. But we'll keep a close eye on that this week.
Nice double bottom formation that we'll highlight as well. Sort of from the two lows. Nice one.
Yeah, it's looking interesting. That, and like I say, with the volume picking up, I think that shows significance to me. So we'll have to keep a close eye on that. Similar, looking at Alibaba now. I mean, you can see it's had a real tough time over the past year or so. But on a weekly level, you can see how much the volume is starting to pick up, which suggests that someone is finding this attractive now at these lower levels. It's quite clear there. And then when you break that down to a daily level, daily chart, you can see again that founding support at this kind of 110 level, a bit of a head and shoulders pattern here. You can see left shoulder, head, right shoulder. It broke through that. Was quite a nice trade. One I think I was looking at the time. It got really low, and then you can see the volume really started picking up, and it's had a succession of closing higher. I think that's how many days that 8 or 9 in a row, where it's closed higher than it's open. So that's quite an interesting stock that I'll certainly be watching in the next few weeks to see if it can follow through on this higher volume. The last one I was going to take a quick look at was Microsoft. We'll bring this out to weekly. Obviously, it's had a really strong run for many years, Microsoft. And you can kind of see there's a bit of a head and shoulders that formed here. And I was really watching this 275 level for a break lower to see if that would play out, but it hasn't yet. I mean, it still can. We can see it more clearly on a daily chart. You can see really clearly there's the left shoulder, the head, then the right shoulder, and this is still a forming pattern. It's only kind of complete when it breaks this neckline, but until we get priced above the right shoulder, which to me is this kind of 311, 310 level, that would kind of invalidate the pattern. but would still be of significance because it's failed to kind of break through. But for now, this support level, which is the neckline, is really significant at 275 because it was important back here. And I look at July back here, it kind of gravitated towards that level in September, but didn't quite hit it. And then it's had a real good few pings off it here. I don't know if ping's the best word, but
yeah,
it's reacted from it nicely a few times in the last couple of months. So that's definitely a level I'll be watching on Microsoft. I think
I like that volume in around the earnings period, the volume spike in there as well on that right shoulder. That's a very good sign to watch for that head and shoulders formation as well. Volume picking up on that right shoulder. So yeah, I definitely think you're right. It's and yeah, I suppose the indices, they feel a little bit better this morning, but obviously I struggled to reboot my computer after the weekend, so Microsoft for me is definitely going down. I wouldn't have had the same problem,
Steve. You need to take the emotion out of it.
I wouldn't have had the same problem with an iOS or something like that, or a Mac, would I?
Oh, controversial. Okay, right. Let's have a look at the gun to the head challenge. So just going to sort of refresh what it is that we do here, because obviously we're introducing Jamie to this now as well. So he's also going to participate in this little challenge that has been ongoing since we started doing these videos. So basically each of us picks a trade live on the video. We don't really give it too much thought. We just kind of, if there was a gun to our head, what would we buy or sell right now? Each idea must have a stop and a target, and all ideas are placed at market, as opposed to our typical style of analysis, which uses limits or stops to get involved. All these trade ideas expire at 9 p.m. UK time, or when the stop or target is hit, and we continue to keep track of the performance of this throughout. So here is the look at the spreadsheet. Obviously, at the moment, it only has Steve and I on it, but we're going to be starting Jamie. Obviously, we've got a bit of a head start on him. But we are really interested in obviously the win rate and well, not really the win rate, but the overall performance and how these trade ideas play out. So just a quick recap on Friday's trade. Steve and I both traded gold, but in opposite directions. I was stopped out, and Steve had a really tiny loss of 0.04 R on that one. But as he showed you on the charts, he was pretty spot on with his call. Just needed a little bit more time for that to work out, but that's the way the game goes, I guess. So gents, let's get stuck in. I've got a call ready, so shall I just jump in?
Yeah, go for it.
I'm looking at copper. I really struggled actually to find anything that I liked, but this is the intraday charts for copper, the 1 hour chart. These are the lows that we posted on the 15th of March up to these highs that we posted on the 24th. We've had a nice pullback to a 50% Fibonacci retracement level here in green. And over the last hour or so, we've broken higher above the 10-period exponential moving average. So my entry is a little bit worse now, but I'm going to have to go with it. It's currently at 4.6848. I'm going to target a move back up to these highs at 4.8110. And a stop loss just below those lows there at 4.6327. So looking for 2.4 R on the copper trade today. That's me done. Who wants to go next?
Jamie, are you ready? I'm ready if you're not ready.
Yeah, you go for it. I'm struggling to find something right now. I'll get something ready.
Right, crude oil. Now, just because there's a bit of an easing intention, really, for me, this is a potential good risk reward trade idea. Looking at the 4 hour chart, I was looking at the news sentiment and the way that we can look at news sentiment. Maybe that can be a bit of a marker as well. I've just had a quick look at news sentiment here. We got this. These are the WCI crude oil. Yesterday we got an 80% positive reading on news sentiment. You can see the news sentiment has pushed higher. I mean, but remember, look at this number on the side. It's still a negative reading. So for me, although this is a buy signal with that 80% confidence, we're still overall minus 0.27 on the sentiment reading. So, and it's just, but it has turned positive. So it's a bit of a flip of a coin, this one. and but from a technical perspective, I can see this head and shoulders formation, which has potential to form. So in an ideal world, I'd wait for this to form before diving in. However, we've got a gun to our head, as Joe pointed out. So this is the head and shoulder formation that I can see being a potential for a turnaround. So if we break it down onto the hourly chart, I'm going to sell into this strength that we've sort of seen this morning over the last couple of hours, and I'm going to go for I think you've got to give it a little bit of room, Stevie boy. How about that for a risk reward trade idea? I'm going to take it above the 4 o'clock bar. You know, if I was being a little bit more conservative, I'd put it above 110.76, which is the high today. But I'm going to be quite aggressive with it, and I'm going to go for this. The target for this trade will be a move to 102.69, and it would really sort of like require maybe, as I say, as sort of like a real Russia and Ukraine coming together and coming to some sort of agreement on a ceasefire. So yeah, that's my trade idea. Hope it's given you enough time.
Just confirm those numbers for us, Steve. What was
the
stop?
Stop is at 110.19. Target is 102.69. Getting short at 108.69.
Okay, lovely. Hopefully, gave you enough time, Jamie, to find something to have a go at today.
Yeah, I think I've got something. Let me. There we go. There's my screen. I'm getting the hang of this. Yeah, similar to you, Joe, I kind of did struggle to find anything too exciting today, but I switched over to New Zealand dollar, US dollar, and we can see it is in a pretty steady uptrend, and it's kind of had this consolidation here between about what we got here. Well, you can see the levels. I've marked them in green and red, and it's kind of posted a bit of a. It's found support at this level. It's found support at this level again. It's retested and it's formed this kind of, I guess, a doji style candle. It's not quite a doji, but which I think the more I talk, the more it's going away from me. Which is it's looking quite positive down at this zone. So I was going to try and buy it here, but now I'm going to have to. Oh, that is miserable, isn't it? We will do that, and I'll have to just extend this up here. So we hit that 2-to-1 risk reward. I think we're just going to have to stick with that and go while it's still there. So this is a 2.04 risk reward, buying at 69 cent 46, I think that is, and with the stop at 0.6926 and the take profit at 0.6987.
Nice. Beautiful. One, Jamie.
Well done, Jamie. Good luck.
Thank you. See how it goes.
Indeed. Okay, so day ahead, we have got only a speech from the Bank of England Governor, Andrew Bailey, today. That's at 12 o'clock UK time. So quite quiet on the calendar front. Later this week, we've got Non-Farm Friday to look forward to, as well as a couple of other key data points as well. So plenty going on this week. But for now, we can wrap it up for the session, and we'll be back tomorrow morning.
Cheers all.
Thanks, guys.
Have a good day. Goodbye.